The US stock market has created more millionaires than any other system in history. This guide explains how to invest in the US stock market, S&P 500, Nasdaq, and which broker is best, step by step, in simple language. How to invest in the US stock market. Complete beginner's guide to S&P 500, NASDAQ, and choosing the best broker introduction. Why the US stock market? If you want to build long-term wealth, protect your money from inflation, the US stock market is one of the best places to invest. The United States has the largest economy in the world. The strongest companies like Apple, Microsoft, Google, Amazon, Tesla. Over 100 years of proven market growth. Many people believe investing is difficult or risky. The truth is, investing is risky only when you don't understand it. In this guide, you will learn what the US stock market is, what stocks, ETFs, S&P 500, and Nasdaq mean, how beginners should invest safely. Which is better, S&P 500 or Nasdaq? Best brokers for investors. A simple investment strategy anyone can follow. No complicated terms. No hype. Just clear guidance. Part 1. What is the US stock market? The stock market is a place where companies sell ownership, shares, to raise money. When you buy a stock, you own a small part of that company. If the company grows, your investment grows. You can earn money in two ways: stock price increase, dividends, profit shared with investors. Major U.S. stock exchanges. There are two main exchanges: NYSE, New York Stock Exchange. Nasdaq companies like Coca-Cola trade on the NYSE. Companies like Apple and Google trade on Nasdaq. Part 2. What is a stock? A stock represents ownership in a company. Example: Apple is worth trillions of dollars. If you buy one Apple share, you own a tiny part of Apple benefits of stocks. High long-term returns. Beat inflation ownership in real businesses. Risk of stocks. Prices go up and down. Short-term losses are normal. Panic, selling causes. Losses. Stocks reward patience, not emotions. Part 3. What are indices? S&P 500 and Nasdaq. An index is a group of top companies combined into one list. Instead of betting on one company, you invest in many companies at once. Part 4. What is the S&P 500? The S&P 500 includes the 500 largest U.S. companies. Examples: Apple, Microsoft, Amazon, Google, Meta, Johnson & Johnson, Coca-Cola. Why S&P 500 is powerful. Covers 80% of U.S. market value. Very stable long-term average annual return, approximately 10%. Historically, who should invest in S&P 500? Beginners, long-term investors, people who want low risk, passive investors, famous. Quote, if you invest in an S&P 500 index fund, you'll beat most professional investors. Warren Buffett. Part 5. What is Nasdaq? The Nasdaq index focuses on technology and growth companies. Top Nasdaq companies: Apple, Microsoft, Nvidia, Tesla, Google, Amazon, Meta. Nasdaq. Characteristics: more volatile, moves up and down faster. Higher growth potential. Higher risk than S&P 500. Nasdaq. Average return: historically higher than S&P 500, but bigger crashes during market downturns. Part 6. S&P 500 versus NASDAQ. Which is better? S&P 500 safer, stable, best for beginners, long-term compounding. NASDAQ higher growth. More risk, best for aggressive investors. Technology-focused, best strategy. Combine both. Example: 70% S&P 500, 30% Nasdaq. This gives stability plus growth. Lower risk than Nasdaq alone. Higher return than S&P 500 alone. Part 7. What are ETFs? Important. You don't buy the index directly. You buy an ETF, exchange traded fund, that follows the index. Best S&P 500 ETFs: VOO, Vanguard, SPYIVV, Best in ASDAQETFSQQQQQQMETFS. Low fees, diversified, perfect for beginners. Part 8. Active investing versus passive investing. Active investing. Picking individual stocks. Timing the market. High stress. Most people lose money. Passive investing. Recommended. Buy ETFs. Invest monthly. Hold for years. Low stress. Proven success. 90% of beginners should choose passive investing. Part 9. How much money do you need? Good news. You don't need thousands of dollars. With modern brokers, start with $10 to $100. Buy fractional shares. Invest monthly. Consistency matters more than amount. Part 10. Dollar cost averaging. Secret strategy. Dollar cost averaging means invest the same amount every month. Ignore market ups and downs. Example, $100 every month into S&P 500 market crash. You buy cheaper market high, you buy less shares. This strategy reduces risk, builds discipline, works best long term. Part 11. Best brokers to invest in U.S. stocks. Choosing the right broker is critical. What to look for: regulated low fees, access to U.S. ETFs, easy withdrawals, fractional shares. Part 12. Best brokers for international investors. 1. Interactive brokers, best overall, available worldwide lowest fees, access to all U.S. stocks and ETFs, checkmark strong regulation, Crossmark. Interface, slightly complex for beginners, Arrow best for serious investors. 2. TradingView plus broker analysis, good for charting use with supported brokers. 3. eToro, beginner friendly, easy to use. Copy trading fractional shares, higher spreads, limited ETFs in some regions, good for beginners. 4. Webull, limited countries, clean interface, good for traders, not available everywhere. Part 13. Which broker should you choose? If you are a beginner, eToro. If you want low fees and long-term interactive brokers. If you want analysis and charts, TradingView plus IBKR. Part 14. Step by step, how to start investing. Step 1. Choose broker. Create an account and verify identity. Step 2. Fund your account. Use bank transfer or card. Step 3. Choose ETF VOO for S&P 500 QQQ for NASDAQ. Step 4. Invest in monthly automate if possible. Step 5. Hold long term. Ignore daily news. Part 15. Common beginner. Mistakes in stock investing. Panic selling. Trying to time the market. Overtrading. Investing money you need soon. Following social media hype. Part 16. How long should you invest? Minimum 5 years. Ideal 10 to 30 years. Stock market rewards. Patience. Discipline. Consistency. Part 17. Realistic returns. Average 8 to 10%. Per year, compounding turns small money into big wealth. Example, $200 per month for 20 years at 10% equals approximately $150,000 plus Part 18. Final recommended strategy. If you are starting today, open Interactive Brokers, invest monthly 70% S&P 500 ETF, VOO 30%, NASDAQ ETF, QQQ hold for 10 plus years. This strategy beats fixed deposits gold. Most traders, most mutual funds. You don't need perfect timing, insider tips, expensive courses. You need simple strategy, discipline, long-term mindset. Start small. Stay consistent. Let time do the work. If you want this guide in PDF, the link in the description you can download.